So, it was a pretty rough ride on Wall Street yesterday as tech stocks took a serious hit. Hey everyone, it's Wednesday morning, February 4th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Yesterday, the tech-heavy Nasdaq Composite sank 1.4%, and that sell-off really picked up steam as the day went on. The Standard & Poor's 500 lost 0.8%, while the Dow Jones Industrial Average fell about 0.3%. Now, early on, things looked okay after Palantir reported surprisingly strong results, showing that the AI trade might still have some legs, but that mood flipped fast. Nvidia fell nearly 3% because of reports that things are cooling off with OpenAI. Apparently, the startup isn't happy with Nvidia's latest chips, which has stalled talks for a massive $100 billion investment. Amazon and Microsoft also slipped as software stocks across the board got hammered. All eyes then turned to chipmaker AMD. After the markets closed, they reported fourth quarter revenue was up 34% to $10.3 billion. Even though their earnings per share and margins beat what experts expected, the stock still felt some pressure. In other news, PayPal had a brutal day, tumbling over 20%. They missed their earnings and forecast, and they're bringing in the boss of HP, Enrique Lores, as their new CEO to try and turn things around. Meanwhile, Disney shares fell after they named Josh D'Amaro to replace Bob Iger as CEO next month. Finally, precious metals had a wild day. Gold jumped over 6%, its biggest daily gain since 2008, and silver surged over 9% as buyers jumped back in after last week's crash. It's definitely a busy week, so let's see what today brings. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.